Hey guys, what's up? Welcome to another episode with me, Shashank Godappa. And in today's episode, we are going to look at two flexi cap funds. Now, as the name suggests, there are different types of funds that we have already covered. We have seen large cap funds, mid cap funds, small cap funds, and flexi cap funds basically give the ability to the fund manager to choose across different market caps. Now, even though it seems awesome to do that, there is also a problem because inherently, if your mix is not good, then it's very difficult for you to beat the index. Not just to beat the index, but also your drawdown, which is the stocks that will actually fall down, or your mutual fund will fall down if you have not optimized it well. So in today's video, we're going to look at what are some two very good funds that we can look at from a mutual fund standpoint with FlexiCap. We will talk about one of the biggest funds as well, and we will look at some other options also. So stay tuned. Now, first, let's look at it from a ranking perspective, right? So if I just rank it according to the top AUM, which is assets under management, over time, you will see Parag Parikh has the highest AUM with 1,13,000 crores. Number 2 is HDFC FlexiCap. Number 3 is Kotak. Number 4 UTI. And number 5 Aditya Birla. Now, the main goal of investing in a FlexiCap fund, or the main goal of investing in any mutual fund, is to stay invested for a duration of 10 years plus, right? If you're investing for 1 year, 3 years, then this is not the place to invest. 10 years, you have to keep your money in mutual funds so that the compounding starts really crazy only after the 10th year. I know it's a very boring game. It's a very boring process, but the amount of returns that you can get if you stay invested for 20, 30 years is just beautiful and unbelievable, right? Now, if we look at a 10-year returns, you'll see that FlexiCap, if I rank it according to returns, FlexiCap has a very different and varied return structure. Why? Because as the name suggests, it's FlexiCap and there are multiple different strategies that can be used here. And there is a lot of alpha that can be created over here as well. Now, if you look at large cap funds, then every mutual fund is playing in the same universe. Mid cap, same universe. Small cap, same universe. But if you look at FlexiCap, now how you balance your portfolio becomes very important in different market cycles. So then that's what I'm saying. FlexiCap is more actively managed and has inherently more higher risk, I would say, but with also a higher reward perspective. And the fund manager has to be bang on with his prediction on market cycles, because if the market cycle is good and he is playing aggressive, then it's great. If it's bad, he has to play defensive, then it's great. So that's how it used to play out, right? Now, if you look at the top returns, you will see that it's very fluctuating. But here the top returns is by Quant FlexiCap, 19.98. Second is Parag Parikh. Third is JM. Fourth is HDFC. Fifth is this. And if I look at it from a CRISIL rating standpoint, Motilal Oswal FlexiCap Fund, Parag Parikh have the 5-star ratings. And then we have HDFC FlexiCap Fund at 4-star ratings. But if you look at Motilal FlexiCap over a 10-year standpoint, they've not done a good job, right? Now, if I look at it from a 5-year standpoint, HDFC Quant come into the top 2 over here. Parag Parikh is slightly down over here in the 5-year category. If I look at it from a 3-year category, again, Motilal HDFC is coming. So HDFC is constantly coming in the top 3, top 4, right? Across different time frames, even from a 10-year standpoint, 5-year standpoint, 3 years, 2 years, everywhere. If you see HDFC again in 2 years also is in the top 3. So it clearly seems like over a 3-year period, 2-year period, 5-year period, and 10-year period, HDFC is doing well. Whereas Parag Parikh has done well definitely in the last 1 year because of their aggressive cash call they took in the year of August, September. But it's also because the fund manager is very good and he understands market cycles really well, right? So in this video, what we're going to do is let's look at 3 options. We look at Parag Parikh, which is the biggest. We will look at HDFC FlexiCap, which is also the second biggest with respect to AUM and is doing really well with respect to all of that. And we'll also look at Motilal Oswal FlexiCap that in the recent times it has been doing well. Now, please note, past performance does not equal to future performance, and they can actually give you very bad returns in the future also. So we don't know. But if I'm looking at optimizing 1% here, 1% there, then I'm in the wrong game, right? Because this is a game that you need to take 2 funds and just sit for 10 years and just focus on them beating the index and giving you a good amount of CAGR over a long period of time. So number 1, let's look at the industry leader, which is Parag Parikh FlexiCap. Now, they have been in the business for a very long time. They are very conservative with their approach. They are not aggressive players. And they've said multiple times in their investor presentations as well that we focus on downside. Like we ensure that our portfolio does not go down a lot, and we will always take a call on risk rewarded ratio, right? Like risk rewarded returns. We will not have aggressive calls is what they're looking at. So they always want to safeguard the money versus going more aggressive on the calls, right? So this is something that they look at. So if you're invested in this fund 10,000 rupees 5 years ago, you would have made 61% returns on just this fund, which is again very interesting. Look at the holdings they have. They have HDFC Bank, Bajaj Holdings, Power Grid, Coal India, ICICI Bank, ITC. So a lot of dividend players are here, which they take and reinvest it back into the fund. Now here, if you see, even though in this market, they are only in 76% equity, 21% debt and 2.3% cash. So they have very clearly come out and said that we do not see a lot of valuation comfort in all of these Nifty stocks or Nifty 500 or whatever it is. They're not seeing comfort in Nifty 500 and they're saying that most of it is overvalued. So they're not aggressively deploying money into the ecosystem right now. Most of it is in financials, 37%, 22% in technology. So 50% of the basket right now is financials and technology. Now coming to the advanced ratios, now if you look at this more carefully, top 5 holdings is 31%, top 20 is 72, P ratio is 18, which is quite good because Nifty's P ratio itself is around 21, 22. If you look at the Sortino ratio and Sharp ratio, it is at 1.5 and 2.2. Higher the better, right? Sharp is risk-adjusted returns. Sortino is also risk-adjusted returns, but Sharp looks like overall volatility, whereas Sortino looks at downside volatility more, right? So ideally, the more the better. Beta of this portfolio is amazing at 0.59. That means it is very defensible, right? And obviously with the amount of cash call they have, it is very defensible and they also have a good amount of alpha into this, right? Now coming down, let's look at the expense ratio. The expense ratio of this fund is 0.63. This is the amount of money that they take to manage your funds into this account. So this is a very defensible fund, even though a lot of people are now crying and saying, Shashank, the AUM is too high and it is not going to do a good job. I severely doubt that because even though the AUM is high, they're investing in companies that have insane amount of liquidity and they have no problem investing in those companies. They're not very aggressive that way. Now next, let's look at HDFC Flexi Cap Fund. So 5 years ago, 10,000 would have become 75%, little more than your Flexi Cap Fund. But again, 5 years is a shorter time frame. If you look at their returns right now, they've invested in ICICI Bank, HDFC Bank, Axis Bank, SBI. Literally, the top few holdings are all financial assets, right? Which is crazy. 88% in equity, 8% cash, 2% in real estate, 0.6% in debt. So even they are not fully invested right now. AUM size is 80,000 crores. Financials is 45% of their entire basket. See, very different from Parag Parekh, who was at 35%. Consumer discretionary 19 and technology 9.7. So 45% is in financial services and also they understand this game really well. Coming to P ratio, lower than the index. Coming to Sortino ratio, as good as what it was with Parag Parekh. Sharp ratio is also very good. Beta is slightly more than Parag Parekh, but Parag Parekh has taken very aggressive cash call. So that is why the beta is also smaller because their in portfolio will not fall down as much, right? But again, from a Sortino and Sharp standpoint, which is risk-adjusted returns, both of them look quite good on par with each other, right? Coming to the expense ratio, the expense ratio is 0.71, slightly higher than 0.67, but it is very negligible. It is 0.04%, but both are looking very good. So if I had to rank HDFC Flexi Cap and Parag Parekh, I would say both are equally placed with respect to their portfolio management. Obviously, the cash calls are different, but the way the portfolio is structured, it is very beautiful, right? And returns also we saw are pretty much the same. There's not much return difference. Now let's look at the newer guy who has done well now in the recent past, which is Motilal Oswal Flexi Cap Fund. Again, let's look at this 10-year, 10,000 per month, 5 years, 59%, lower than HDFC, lower than HDFC, lower than Parag Parekh also. Very interesting. What have they taken? Coforge, Polycab, Dixon, Kalyan, Persistent, Trent, CG Power. So their Flexi Cap portfolio looks a lot similar to their mid cap portfolio, honestly. 93% in equity, 6.7 in cash. Heavy on technology and consumer discretionary. The P ratio of this fund is 56, which means it has a very high risk embedded into it. The Sortino ratio is lower, the Sharp ratio is lower, the beta is higher. So I would not want to go further into this, but we can go check the expense ratio, 0.85. So from all standards and all standpoints, it's a very high risk portfolio, but the upside seems to be slightly capped compared to, let's say, a Parag Parekh or a HDFC Flexi Cap fund that we can see here, right? Now, if you want to take another example over here, something that has been in the top with significant AUM, very few companies are there because Kotak is very, very far away from the median. So now if I had to just take two companies over here, one would definitely be Parag Parekh, HDFC Flexi Cap would definitely be another option. And if I want to play it slightly safe, slightly aggressive, I would definitely go with a Motilal Oswal, but that's only if I want to play aggressive. There are some new people who have also entered the space. A lot of small players have come in. I think Capital Mind recently came out with their Flexi Cap fund just now, which was also backed by Zerodha. So that is something I am going to wait and look out for. 361 is also a player in this space. If you see the last 2 year returns, very few people have actually come up to the top with respect to returns. It's a very competitive space, highly competitive space. So this is something we'll have to now sit and watch and see how this evolves over a longer duration or a longer period of time, right? But again, this was the entire video of the top 2 mutual funds. If you have any doubts, any questions, put in the comment section below and I will take all your questions over there. Awesome. This is me, Shashank Godapat, signing off, guys. Take care. And don't forget to click on that red button, which is a subscribe button, because we put a lot of effort into putting such videos out for you guys.